Hey folks, welcome back to Macro Crazy. Hopefully, Monday was a good trading day for you. Obviously, we're looking for hidden investment opportunities, so that's what we'll talk about. Disclaimer as always, I'm not your financial advisor. Do your own diligence, your own research, and you're taking your own risk. But hopefully, what I provide is something useful that will inspire ideas that will help you produce uncorrelated returns. Today's video is going to piggyback on the first video I did, which was about Somalia and how shippers could see price increases because of extra costs related to security and higher insurance costs. So that is inflationary, of course. That's a piece of the puzzle of what's going on around the world. And today we're going to be talking more about our new inflationary world. From Zero Hedge, one bank is warning that soaring food prices could lead to social instability. Duh, isn't that obvious? If people are hungry, violence or protests, whatever it is, could definitely happen. In an inflationary world, we've seen commodity prices continue to climb. And so protests from hungry people should not be a surprise. And this is happening around the world, and I would expect to see more of this. So another piece of the inflationary mosaic that's being put together, and one as an investor you should understand and figure out how to profit from it. Of course, lack of food could lead to political instability and other things. So we definitely need to keep an eye on that. But our focus is how will it cause consumer behavior to change and who will benefit so that we can prepare and invest appropriately. So last video, I spoke about the three tiers, and today I want to go deeper into that. Typically, when you think of inflation, you're thinking of buying gold, or in this case, maybe people are buying Bitcoin or Ethereum or one of the other cryptocurrencies. But some stocks do fairly well in inflationary times, and you need to identify those stocks. Typically, what you're thinking about is stocks that are consumer staples. What does that mean? Well, basically, things that people have to buy, right? Those companies tend to have some pricing power in tough times. So, what am I talking about? Let's think industry. Let's think like pharmaceuticals. Are you going to stop taking your blood pressure medication or buying it just because the price has gone up 30%? No, you have to cut somewhere else and continue taking your medication. It's for your health. So, pharma is a great industry to look at in times like this. Other consumer staples are out there, but pharma would be my number one preference. Of course, you can always look at a company that sells a lot of alcohol. And per our tiers, these are tier one ideas. These might be hard to capture. In fact, some of the move might have already happened. What you can look at is tier two and tier three. So tier two in this case would be the key suppliers to the pharma companies, for example. Who are those? How significant are the pharma companies to their revenues and profits? And you can identify those looking at the financial reports. Tier three is key suppliers to the key suppliers. So they would also be benefit or be hurt by moves in pharmaceutical stocks. And again, you want to identify those that are most exposed so that you're well versed and understand which way to go depending on what pharma is doing. And since they're hidden, or what I would call hidden, their moves might not have happened or might not have happened very much yet. So I would be looking at those using the financial reports of the pharma companies, which do identify key suppliers. So I hope that was helpful. Good luck and good trading, and look out for video 3, which should be out by the weekend. Thank you very much.